Think we're going. This is June 2021. This is our fiscal end of year. I am both excited and a little disappointed. Well, not really disappointed, but a little sad. We did not beat our benchmark this year. Just want to quickly go over that just really quick here so I can find it. I think I'm having that problem again with the screen. There we go. All right, so here we go. So this is the annual return for the Dow Jones, which is our benchmark, and as you can see, it just steadily increased from roughly 25,000 up to 35,000, which is a 40% increase. We didn't do anything close to 40%. Our annual return for this year was right about 10%. It is possible it would have been a little bit more, but timing kind of threw it off. But 10%, 11% is where we are this year. So really quickly, I'm just going to go through our positions. Best Buy has been doing really well for us. You can see we're up about 13%. The price itself did get above 120, which is our cutoff for investable securities. So definitely keep an eye on that. Also, too, keep in mind this is our end of year, so I'm going to be judicious about how I handle sales. Being that, when July gets here, we'll have a brand new basket of stocks, and who knows, Best Buy may not even be in that basket of stocks. So if the price is above 120, we'll definitely get out of that, and I will not purchase anything to replace it until July. We have our new basket of stocks. Do want to talk just a little bit about what they have going on. Their sales are about 60% delivery or store sales, which means 40% is online. The company itself has basically decided that they are going to keep everything the same as far as the COVID stuff, right? So, they're focusing primarily on online sales, lots of online customer service, things of that nature. They are changing some of their stores to be more of delivery hubs versus an actual store. They're still struggling with getting product in some of their stores. I was just in the store recently purchasing some electronics, and yeah, I mean, they don't have everything there. They just don't, and a lot of the reason for that is because they're relying mostly on internet orders. So, having the product in store is definitely going to help drive sales, but their sales are through the roof. I think they've increased sales something like 27% this past quarter. What else did I want to talk about? Oh, they're also doing a membership. It hasn't happened yet, but they are going to introduce it. They do currently have what basically amounts to a warranty plan where you can pay, $100, $200, and you'll be able to basically replace your products or get store credit within a 2-year period. And so that's a really great deal. And so they're looking to capitalize on that with this membership that I guess is going to cover everything that you purchase. Not quite sure, but it's just a revenue driver that they already have, but this is going to be, I guess, something a little extra. All right, Rogers Communications. As you can see, we're up almost 7% in this position. So we don't quite have a sales signal yet. But Rogers has done well for us. Has definitely been a slow mover. We've been in the position for quite some time now, but they've been paying a decent dividend. I do not have an earnings call on them. So that means that one is coming soon. So I'll definitely be looking forward to seeing that. The last earnings call that I did go through, they talked about purchasing a new company in Canada. They discussed 5G, and they discussed, bringing sports and everything back. I think I discussed this in the last video. But anyway, um, yeah, I mean, sports is coming back. Stadiums are not 100% yet, but they're coming back. So we'll keep an eye on that. Excel Energy, we are almost down 10% on the name, and so I'm assuming we will have a buy signal on that here soon. But don't have an earnings call on them other than the one that I discussed a few videos ago. Valero, same thing. Don't have an earnings call yet on them, but they are doing really well for us. We're up about 40% in the name, and again, I don't know what the new basket of stocks is going to look like. The price is nowhere near $120. So I'm going to stay in the name for now. Same with Best Buy. Campbell Soup, we're currently just down a bit, so we don't have a buy signal yet, but not doing great, not doing horrible either. Merck is really interesting, and I just remembered. So Merck finally spun off Organon, which is basically just going to be a bio pharmaceutical company, just like Merck. Difference being is that Organon is going to hold medicines that I believe are, I may get this wrong, but I think they're holding on to medicines that may be on their way out. Um, it's a really interesting split, a lot different than what I'm used to seeing in the healthcare industry. So instead of, separating the company along the lines of, consumer products or or haven't gone to market yet products, Organon seems to just have a set of products, and Merck has a set of products. So Merck still has Keytruda, which is really big, and Organon has some other medicines too. I forget the names right now, but either way, this is a really good deal for us. We got cash and stock for this split. So we own one share of Organon, which is going to go into our orphan portfolio, basically, where we just own the share and we'll just hold it, forever for the most part. It's not paying a dividend, but again, we're just going to hold on to it, right? The stock has not done very well since it's come out. I think it's down something like 20% or something crazy like that. The cash payment was about $15, so it's not a whole lot. But the way you got to look at this is basically just a dividend coming off of Merck. I mean, it's a pretty huge dividend, compared to, how much we pay for it, right? So the stock itself slightly down, as you can see, down about 6%. We don't have a buy signal yet, haven't gotten to that point. And so yeah, so we'll just keep an eye on it and see where it goes. Fastenal, don't have an earnings call on this one yet either. Up about 5 or 6% on the position, so doing really well there. I don't expect much to change, but I am looking forward to going through that earnings call when it does come out. All right, next one, Southern Copper. Southern Copper has been very volatile. The price has gone as high as 71, and it's come down quite a bit to about 68, and I think right now it's hovering at about 69. But we do have a sales signal on it. Again, price is not close to 120. And I don't know what the next basket of stocks are going to look like. So we're just going to hold on to it for now, and wait till July. Regions Financial. This particular company, as you can see, the program is calling for 476 shares. We currently have options on the table for 400 shares, and we've made out pretty good on those options. The next set of options expire on June 18. And so if Regions Financial does not go past 22.50 by June 18, then those options will expire. And then I will wait again until July before purchasing any more options or doing anything with the financial sector itself. If in fact Regions Financial does break below 22.50 before on June 18th, then of course we will have those 400 shares, and I think we can be happy with that. Garmin is above the $120 mark, and as you can see, we're currently up 21%. So we're going to go ahead and sell out of Garmin for the little bit of profit that we do have, and increase our return, right? See if we can beat the benchmark next year. All right, WPC. I always forget the actual name of the company, but I think it's Williams Pair. I forget. But anyway, real estate. They've done really well. Their earnings call discussed, $500 million in deals that they're going to close in the next coming quarter, meaning that they're going to purchase buildings from companies and then lease those buildings back to companies. Their return on capital right now is about 6%, and then they are increasing rents roughly 2% a year. And so that gives us about an 8% return on our money, which is not a bad deal. They don't have any significant foreign exchange risk to even really mention. The only thing that is of concern at the moment is that, and I forget the exact number, but there's a large portion of their leases that are capped at 2% and 3%. And so with inflation at 2 point something, right? If inflation does get out of hand, that means that they cannot raise rents enough to cover inflation. And so that means that 8% starts to come down, 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 down. And being that the stock price is reflective of their return on capital, we can definitely see a hit to the stock price if that were to happen. As of right now, I think it's okay. But again, inflation can be a bit of concern. I'm not sure what the inflation is globally at the moment. That is something that I'll look into. But I know right now in the U.S. is 2 point something. It's above 2% rather. So that's it. I'll get Organon added to our orphan portfolio. We'll sell out of Garmin, and we will wait to see what July brings us. And that's it. So again, for the year, just to make sure, I think I was already at 200. Let's go up here. There we go. For the year, 10.56%, and Dow Jones roughly 40%. So we'll see what happens next year. From me to you.